Hey guys, what's going on? Welcome to the video. So it's been a slower past few weeks in the stock market, but there are some potential large moves setting up very soon, and it will be important to take advantage of those moves. In this one, we'll be going over the outlooks on the S&P 500 as well as Bitcoin, and then go over the top trade ideas that I'm watching on individual stocks in the week and weeks ahead. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a quick look at the S&P 500 with the SPY chart, the same range and choppy price action continues to build out. The early week dip got bought up at 635, and then on Thursday, it reattempted to break out above the 645 to 646.2 key zone. Then Friday morning gapped up into new highs, but this resulted in a failed breakout move once again, as the fail back below 649.48 to 650 acted as the downside trigger. Then it spent the rest of the day consolidating around the 645 to 646.2 key zone, with a slight close above there. So into next week, holding above 645 to 646.2 keeps direct upside in play, which could then target a move back to 649.48 to 650, then Friday's high at 652.2 before new all-time highs above there. If it fails back below 645, it can pull back once again, with the key levels below at 642 to 642.85, 639.85 to 640.5, 637.58 to 638, and then the bottom of the range at 633 to 635, which is the bottom of the overall range and would be the larger downside trigger on a break below there. So now taking a look at Bitcoin, in last week's video, we went over the pullback that had played out and talked about that 105,000 to 109,000 zone. That was a likely area to expect buyers to come in for at least a new consolidation period or a bounce, and that is what played out so far. It has now built out a new pattern as well that can be on close watch for a potential directional move soon. So starting out with the bull case, on larger time frames, 112,000 has been a big pivot level, but if we zoom into the recent price action, there is now a new well-defined resistance level that is built out, and that is at 113,400. So this current consolidation range that's built out can be looked at as an inverse head and shoulders pattern, with 113,400 being the neckline and the breakout trigger above. A successful break and hold above there can target 117,000 to 117,500, then 120,000 as the next key resistance level above. And the same bear case that we went over last week continues with 105,000 to 109,000 as the below support, with below 105,000 being the downside trigger. Breaking below there would likely set up a backtest of the key trendline as new support, which would line up with about 101,500 to 102,000, and if tested, that would be a very likely spot for bounce with that key $100,000 level as a backstop slightly below there as well. Alright, so now getting some trade ideas for the week and weeks ahead, starting out with the heavily beat down stock that looks to be finally setting up for an upside reversal. And that is Enphase, ticker symbol ENPH. This is historically a very volatile stock, and it's been stuck in a straight downtrend for the past 7 months, and it's finally attempting to break out of it. So zooming in, we can see that the trendline resistance and the 50-day moving average have acted as key resistance and the top of the range since January. This includes 8 different tests and rejections of these levels, so it has been very well defined. But on Friday, it's gotten its first clean move above the 50-day moving average. Now if this holds, it can be the start of a large upside reversal. So into next week, in order to see continuation higher, we can watch $40 to act as key resistance and the next upside trigger. Then above there opens upside to target the levels above at 43.9, 47, 50 to 51.5, 54.75, and then 59. And a simple way to trade this break next week is you could enter on a break above $40 per share and play with a tight stop loss back below to keep minimal risk. And this gives a ton of upside to ride the large upside reversal back up if it is able to successfully follow through to the upside. When entering breakout setups and reversals like this, you should expect to get stopped out a couple times before it truly works out. But if you get those stop losses very tight, we'll take a couple very small losses before a massive win if the setup plays out, which setups like this are pretty strong odds to do so. So the risk reward is great overall. And Amazon, ticker symbol AMZN, has been a stock that we've been going over quite a bit, and it has continued to give great entry opportunities. In Monday night's watch list in the Discord, I posted a setup as a buy opportunity as it was backtesting the 50-day moving average, which had been the previous 2 swing lows as well, and it successfully held once again. Then on Wednesday, it had a gap and go move above the trendline resistance and tested the next level above at 236. So now going into next week, we can watch 230 to act as support, and that also lines up with the trend line, and above there keeps immediate upside play if it's able to hold. Then a break and hold above 236 could then target 240 to 242.52 next, which is the top of the long-term cup and handle pattern and would be the large breakout trigger into new all-time highs above. And the 2 strong conviction setups that we went over last week were with Zillow and Abercrombie, and they continue to set up very nicely. With Zillow, ticker symbol Z, the well-defined breakout trigger above is at 89.4, which can be buyable above there with a tight stop loss back below. And if it's able to successfully follow through on the breakout, the upside targets are at 100 to 104.15, then 119.7 to 125. And Abercrombie, ticker symbol ANF, also continues to build out its well-defined consolidation range below the key resistances at the 200-day moving average, which is at about 101, and then 105.1 to 108.35 key resistance zone. And it's important to note that the longer these consolidation ranges build out, the larger and more violent the breakout move can be. Above 105.1 to 108.35 triggers the breakout, which would then target 121.3, 130, the 149.95 gap fill, and then 160 as the target levels above. And these should continue to stay up the top of your watch list, as when and if they break, we can see some very violent breakout moves to the upside. So that's everything that I'm watching for in the week ahead. The choppy consolidation range on the S&P 500 has now built out for about a month, so it's very likely that we'll see a directional move pretty soon on that, as well as those individual stocks setting up very nicely for potential large breakout very soon. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and answer your questions you guys have in there. Good luck trading the week ahead, and I will catch you all next time, and peace out.